Well, good morning, traders. I want to take a bit of time today because I want to have a look at these financial markets because it feels like we've hit this purple patch. Yeah, we've got the mojo for risk assets, and if you look at the markets, they are going from strength to strength to strength to strength. Whether you're looking at equity markets, whether you're looking at commodity prices with oil or copper or any of the other base metals, they just look so strong. Risk FX. The Aussie dollar, the CAD, the Kiwi dollar, they're just absolutely flying. The Brazilian real is having an absolute stonker. We're looking at what's happening in the yuan. We're looking at US-China trade tensions and saying, well, the yuan's strengthening. We're taking some solace from that, and that's giving a feedback loop into higher risk assets as well. You can look at what's happening on a fundamental perspective, where reopenings of economies are far more intense, far more aggressive than what people have been anticipating. Every day we wake up and see a headline that's saying the S&P's higher because of reopenings. But it's true, these reopenings are very much in play. We're seeing high frequency data starting to improve, fine off its very, very low levels indeed. But it is improving, and the trajectory looks like it will continue to improve going forward unless we see a second wave, and obviously we hope that doesn't happen. We can have a look at central bank stimulus. Obviously, this is a large amount behind what's been behind the trade. You've got balance sheet expansion, excess reserves, M2, M1 money supply increasing, government supports on a fiscal level. That's only going to change and potentially increase going forward, just maybe tweak the policies going forward. But that's very much supportive as well. Have a look at the bond market. Risk assets have got a very, very close eye on the bond market, despite everything we're seeing from balance sheet expansion, everything we're seeing from risk assets and commodity markets moving higher. We're not seeing any movement in bonds. Now, that could be a worrying sign, but I think as risk assets are looking what's happening in nominal bond yields, 2s to 10, they're not moving. 30-year treasuries have started to sell off a little bit. They started to break out, and it's worth watching, but it's very slow. Most of the nominal bond curve is not selling off. If you have a look at what's happening in inflation expectation, I think it's absolutely key, whether you're looking at 5-year break-evens, 5-year swaps, inflation expectations are firmly anchored. If you get treasury yields and adjust them for inflation expectations and give us what we call a real return, they're deeply, deeply negative. So if you're an equity trader and you're looking at the future cash flows of these businesses and you're trying to understand a net present value, the fact is that these cash flows are becoming more compelling given what we're seeing in the treasury dynamics. The idea of TINA, there is no alternative. When you're looking at the bond market and you're looking at the real returns and they're so uncompelling, it's just pushing up these high growth, high PE names every day. And then you've got the systematic crowd who continue to drip feed capital into the markets. All of these functions are working well, but it's until the point where we actually see the bond market selling off and the rate of change lifting to the upside and we start seeing implied volatility moving higher in the bond market, then I expect to see both the dollar staying fairly suppressed, but also equity markets continue to find buyers on support. But let's have a look at some of those charts and seeing where we are, because it's such an important time.
Okay, I want to start today with the NASDAQ because, nothing says strength and trend like the NASDAQ at the moment. We're about to test the all-time high. We're not a million miles away from there at the moment. You can see the 5-day exponential moving average, the blue line there, really holding things and just showing the clear trend that you've been seeing. We're making this series of lower highs and higher lows. We're not a million miles away now from the all-time high set back in the 20th of February. So lower real yield, that's the market that really benefits from this situation. Have a look at the S&P 500 again. Really definitive move higher in the exponential moving average. We've broken through the TDST. We've set a stage there to make a platform higher, as we did when we broke through the 200-day moving average there. But the trend is strong. And again, when we've got our eyes not just in trend, and that's really important for systematic traders, but also what's happening in implied vols. If the VIX index does crash through these sort of 28% levels, which is priced off the futures here for our price, that's just going to incentivise vol targeting funds to drip feed more capital into the market, not just the trend following crowd. But let's have a look at the other markets. The DAX, we're testing this 200-day moving average at the moment. Again, we're just holding this 5-day. This looks really, really strong at the moment. European markets obviously watching what's happening this week from the ECB. In Asia, we like the Japanese market. Look at this trend. Okay, it's fine. It's mature. It's strong. Perhaps it's a little bit overbought, but we're hugging this upper Bollinger Band at the moment, and it looks like the path of least resistance is higher. All the sell-offs are contained within this 5-day exponential moving average. Again, it just shows you the impulsive nature of the move higher. And again, the CN50 on the mainland looking pretty good. The Aussie market underperforming a little bit there. It's probably less attractive than some of those other markets that we've been seeing. Let's have a look in dollar CNH because the yuan was supposed to weaken, right? Everyone was talking about the fact that we've got US-China trade tensions. The yuan was supposed to weaken. Not happening. The yuan's strengthening every day, or most of the times recently in the PBOC's fixing. They've actually weakened the midpoint of dollar CNY, strengthened their own currency, which is telling you a fairly political message. Have a look at copper prices. We broke through 246, which was the 21st of May high. Looks very strong. We've got an uptrend in there. That looks pretty good. Have a look at the Aussie dollar. We're up, 28% from those highs. A lot of good news being priced in. A lot of positioning is being readjusted now in the Aussie, but it's on fire. You've got a lot of trend fund moving into those markets there, as is the case in Aussie yen. Very, very strong there. The CAD yen's a trade that I've liked. We've hit the 200-day moving average. Wouldn't be surprised to see a little bit of profit taking coming through ahead of the Bank of Canada meeting coming through. Who wants to really hold a maximum exposure in the Canadian dollar ahead of that meeting there? You've got dollar yen, which has moved up despite a real kind of lack of move coming through in the bond market. But you've seen dollar yen moving up as well. You name it, we can go through these charts, but risk is very, very much in play at the moment. What's going to change that dynamic? For me, longer term, it has to be a stronger move up in real yield. But let's watch these charts. Trade them with Pepperstone.